Do you want to learn Elliott Wave Theory? Well, if so, consider joining the Green Star Trading Patreon at Tier 2 or Tier 3. You will unlock this playlist, 14 video part series teaching you Elliott Wave Theory from scratch in a simple and easy to follow manner. You'll also get access to other playlists such as the My Chart series showing you how to set up my chart the same way I do, with the same indicators and tools configured the way I use them. Also, I've now got a second series of this which will cover all of the classical analysis techniques I use. We've started with episode 1, part 1 and part 2, support and resistance, but we'll be covering volume profiling, candlestick patterns, indicators, all sorts of things to come over the following months. I also have my deep dive videos as well, which I'm now currently doing a second part of a new one which will be uploaded to here soon. And I also have a trading playlist showing you how to use the standard trade setup, the STS, and a little bit on psychology and risk management as well. You can unlock all of these things by becoming a patron today at either Tier 2 or Tier 3. There are some other benefits to joining Tier 3, or you can just support the channel at Tier 1 for a £5 a month. Either way, I'm not going to read it all out to you. Follow the link in the description box below of the video you're watching now. Come over, have a read for yourself, and if you want to sign up, please feel free to do so. I would always recommend signing up at the start of the month so you get a full month's value for your subscription before Patreon charges you again. Alright guys, let's get back to the video. Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, contrary to the rumour, my YouTube channel is actually still active. I know I haven't put out many videos lately, but it is the summer holiday and I've got my little girl home from school at the moment, and I've still got a 4-month-old baby at home as well. 4-month-year-old? That doesn't make any sense. 4-month-old baby at home as well. So I'm run off my feet at the moment, and unfortunately the usual YouTube schedule will not get back to normal until that situation ends, until kids go back to school in September. However, in the meantime, I'm doing everything I can to support my Patreon subscribers and keeping frequent updates on the Discord as to what I'm thinking, also answering questions in the Ask Tom channel or any queries that come across my desk, also providing a weekly exclusive video to the patrons, and also doing the weekly live streams as well. So unfortunately YouTube is just going to have to be on the back burner until the situation gets back to normal. But today, for the YouTube audience, since you've been so patient, we'll be receiving a video on Bitcoin, and that's what we're going to look at today. We're going to look at the larger time frame and the shorter time frame. Larger time frame looks nice and crisp and clean. Shorter time frame looks a bit like this really at the end of the day, so a little complicated, but essentially let's just cut to the point, shall we? My primary count is that the market has bottomed. Now, we mentioned a few weeks ago the idea of an extension off of the low and how we're going to count it. That extension is still alive to this day and has continued to advance, so it is my primary count. It is an extremely bullish count, but thankfully, due to the nature of extensions, it is easily invalidated as well, so I can pivot very quickly if it's wrong. I also have an alternative bullish way of looking at it off of the low, and I have bearish ways of going lower as well. So primary count is bullish, market has bottomed in that opinion, and we've got a very bullish count that we're observing currently. So if that's all you're tuning in for, there you go, you can go now. But if you want to hang around for a little bit longer and see what conclusions I've drawn and what alternatives I've got, then feel free. So here we are on the weekly time frame with the long-term count. Now, if you're not familiar with my count up until the high from the beginning of the price action of Bitcoin here on the BLX, I have a video from a few months ago called BLX, I think it is, and you'll be able to find it. It's basically about the entire price history and why I've come to the conclusion of the count I've come to, which is in itself a bullish extension of 1-2 into 1-2. Okay, purely because of the way those corrective structures have occurred over time and the certain habits of repetition we've seen in their structures and the measurements we've taken to express them. But like I said, different video. Here on the weekly time frame now, we've come back into this little demand zone. I say little because we're here on the log chart at the moment. It's basically a retest of the previous highs into a prior buy zone, prior demand zone, of price coming up and retreating around a little volume node as well. If we were to go and get a fixed volume profile from here and run up this, you can see how this little area here is providing that buying power here. Previous high, little volume node, demand zone, move up and move back, finding buyers, finding support. Okay, so like I said, it may not look very impressive, but when we take the chart off of log and look at in line, all of a sudden this decline looks far more impressive, far more severe, and the retest of a high looks far more significant at that point. So we have to keep that in perspective when viewing the chart. Now, if we were to break down from here, because we can, this might not be a bullish count. If we were, I do firmly believe that we would find support somewhere between 10 and 12,000. Major support zones here, huge demand in here. We would highly likely find support lower. So it's no big deal if the current bullish interpretation we have is wrong. There will be a buying opportunity even if the market collapses from here. We are back above. Now this is the BLX, so we've got a delay on every time frame. This is a weekly time frame, so we've got a weekly candle which did close above the 250 exponential weekly moving average. So we've moved back above a major level. Now we have done this before with this little move below. We then came up and then came back below it before moving up again. We got what was a very typical deep wave 2 correction. Now I'm expecting, whether this is an extension or not, diagonal or an extension, no matter how high it comes, I'm expecting that same deep 2 again, which would likely bring us back below that 250 exponential weekly moving average. But I don't believe, given the primary count at the moment, that we are going to set a lower low. I think we're going to come up to a high and set a higher low eventually. Now how we do it, in my opinion, if this is an extended count, an extension into a larger one, intermediate degree, then I think we're going to have to get very, very bullish first, drag in everyone we possibly can, get everyone believing we're immediately off to the moon, get the super hype train going in order to dash it all to destruction, and have the bears come back cocky, bold, overconfident and certain that we're going lower. So in other words, we'll come up, big little burst of euphoria, not massive like top out euphoria, but massive overconfidence, let's put it like this, and then we'll have a really scary looking reversal where all the bears will come out absolutely certain that they're right, but they won't be, and we'll get a higher low and then we'll be off. In other words, it's the first initial flush out to test of nerve. Who's actually going to see this one through? Who's going to bail and flip 180 the second things look bleak? It's just the way we tend to come off a low in any market, and I think crypto just has a habit of being even more severe. So that's kind of what I'm expecting to come about over the next few months. Now I could be wrong and it could just go off to new highs from here. However, if this is a low and we have bottomed and completed the correction, I placed a original pitchfork around it here for our primary 1 into our primary 2. So from here we have roughly an 80% chance, if having bottomed, of making that median line. Now how and when we do it, we could come up in a 1 and make it prior to the previous highs, come back in at 2, accelerate in a 3 of a 3 of a 3 on the larger time frame. Or we could meander up 1, 2, 3, 4, 5, and this could be the 1. Okay, it would still be smaller than the prior larger wave of the prior larger degree. Now I don't think we're probably going to get that high. I think the first scenario is more likely. We're going to come up and do a 1, and then we're going to come back and do a really deep scary 2, and then we're going to go up in a 3. Okay, that tends to be what I'm leaning towards. Now then, we're coming up, we've got the 60 exponential weekly moving average still well above us. As you can see, this has provided support in the past, and then forward in time that support level held until we broke and back tested it and flushed down to these levels here. So we're going to have that as resistance coming up as well. If we look at our indicators on the long time frame, we can see that each market low, each market bottom formed in oversold conditions. We went from overbought on the weekly to oversold and market bottomed, overbought to oversold, market bottomed, overbought to oversold, and I'm calling a market bottom here now. So we've repeated the same pattern before. On the MACD we have now crossed back over of the average through the signal here. Bearish momentum has given away to green bars on the histogram. We are not trending positively yet. We have to be above the zero bound on the weekly time frame in order to be doing that. So at this moment we're picking up bullish momentum. We have a traditional buy signal. I know people don't like to call it that, but that is traditionally what it is, if we have this support off of a low to back it up. But we've got a long way back to positive territory here on the MACD. Now we could get there quickly, There's no doubt about it, the way crypto works. And then once we're trending higher highs, higher lows in that positive territory like we were here, and like we were here, then we are in the big, real bullish phase of the larger move up. At that same time, we would expect to see a move from oversold through neutral into overbought conditions on the weekly time frame, to neutral, to overbought, to neutral, to overbought, until finally the next bullish phase ends on a larger time frame and we come back to oversold to find another low. Okay, so that's how I see things on the weekly time frame. Let's come down to the daily time frame and see what we can see here. So as with the 250 on the weekly is the 60 on the daily, and we have moved above it and closed above it. So we may come back through it, no doubt, possibly, but we have for the moment closed above the 60 exponential moving average. Now we've done it before here and moved up here and here, but they were just temporary moves up before further move down. So this could be, in the bearish setup, a temporary move up before a further move to a lower low. Bullishly, we could just continue to extend from here, or we could have a pullback into a 2 and then move up into a 3. Okay, so let's just tidy that up a bit. Now let's bring up our various pitchfork here. We need our corrective, original corrective pitchfork. So based off of the idea that this was an A-B pivot, we've come, essentially, we've gone from, let's just tidy this one up. Excuse me, I'm getting my eyes a little confused at the moment. Hide this one. Right. And let's just turn this into the basic original. So from the A to the B, we've come to the golden zone for the 1, back to the edge for the 2. Median line for the 3, back to above the 50 in the golden zone, probably the 786 or the 89 for the 4, down to the golden zone to complete the C at the 5th. Then back to the median line for the 1, back to the median line to test for the 2, 1, 2 off of the 38, 1, 2 above the 60, and now we have temporarily, because we may flush down, but we have for the moment broken this structure, broken this downward trend of this pitchfork. So if we continue to extend from here, that's going to start looking very, very positive. Okay, and maybe we're just setting up the initial signs of that now. So that covers the primary count. A, B, C complete, 1, 2, 1, 2 off of the low. We'll come into a shorter time frame to have a look at this extension in a little while, but that's essentially the most bullish count we've got. So let's look at some alternatives then while we're here, and let's just close off the support and demand here and zoom back out. Oh, which one's this one? It's the same one. What we'll do is we'll put this in, I don't have a folder for them, so I'll just hide it for the moment. Turn off our moving averages as well. Right, alternate combination count into a wave 4. This is a much older count, something we were working off a long time ago, back roughly this time last year actually. We're working off of the idea of this turning into a flat. Now it doesn't look like a flat anymore, and a flat would likely invalidate it. If you had 1, 2, 3, 4, the 5th would have to come in prior to this invalidation point. Now it's not impossible. It's not impossible that that's the case. 13, 8, 3, 1, spot 4, 1. However, I'm counting it using this channel here, taking the 2 and the 4, projecting from the 3 to find the 5. And if we were to line up as the channel from the 1, we get this little throw over in the 3. Now it depends how you want to count this, but either way, 2 to 4 looks better. Lining up with the 1, we get this throw over. If we were to take the continuation of that second method of Elliott, we would move the line, parallel channel, the upper trend line to the 3, and that will give us our 5 somewhere up here. Okay, so in this scenario I've got A, B, C into W. This is a flat. 3 into A, 3 into B, 5 into C. Then we have an adjoining zigzag for the X, and then we have the zigzag for the Y. So it's a flat into a zigzag. We do not count the X wave as part of the correction. It's simply an adjoining wave between two corrected structures, in this case a flat and a zigzag. Either way, this has us as complete as well. The difference being the longer term move is not a 1-2-1-2. Right, we're coming up in a 5th. and then from here we're going to correct into a much deeper correction. Now this could be $250,000, okay, somewhere in that region likely, and then we're going to then roll over. Now in the extension count, the targets are obscenely higher, and I honestly don't think it's worth calculating them at this moment in time until we see more evidence, because it's all just bull porn at the end of the day, and there's no point going on about it until we start to see evidence that that's where we're going. But they're big, put it like that. So this is an alternative count, bottomed. If not, this was a flat, A, B, and this will be 1, 2, 3, 4 and 5, and the fifth would have to come in prior to this point to get A, B and C flat, so cannot go through this level essentially for this count to be valid. Then we've got a bearish option. Now, about time we had a bearish alternative really, isn't it? Which is the idea that we're in a deeper double zigzag. Okay, so we've had an A, B, C. This concludes the same idea of the bullish count, that it's 1 into 2, except it gives us a deeper correction. So we get a 3-wave move zigzag into a W, we get a joining double zigzag into an X. We then get 5, 3 and 5, again another zigzag into our Y, creating the double zigzag structure for a deeper 2, which would bring us into that support and demand levels that we discussed earlier, deeper, be somewhere between 10 and 12 grand. That cannot be really precise because we don't have the completion of the B yet. If this is a B, we would need to have the completion of it and a reversal in order to help predict where the C would be. So we can't really accurately do that at the moment, but we can just summarize where an obvious place for support may be, and that's your bearish count. So I think we've covered everything we need to cover on the long term now, so we'll come in and have a look at this extension idea on the short term and how we've come off of the low. Okay, so here we are with the bullish extension count off of the low. We're on the 30-minute time frame here. Here's the low back here on the 19th of June, and since then we've come up in, I make it a 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, so on and so forth. Big extension. And now we've got 3, 4, 3, 4, 3, 4, 3, 4, 3, 4, 3, 4, 3, 4, 3, 4, 5 to do to get 1. Do you understand? And that will give us an intermediate 1 by this count. I've had to upgrade the weight degree to minor degree for the initial pivot because I literally ran out of labelling. It only goes down to minuscule, so it can't go any further than that. I do have an alternate way of looking at this, which is a little, it's still as bullish, but it gives us a little bit less subdivision, but it's still the same idea. So I've left this at minute degree, 1 into 2, impulse here into 1, zigzag here into 2, impulse here into 1, flat here into 2, impulse into 1, flat, still playing out into 2, and then we're going to go 3, 4, 5. So on that note, let's come in and have a look at the most recent price action. So we'll look at the other count as well, and we'll look at the alternates as well. So, or we'll try and put something together before we leave today. So the most recent price action, let's come down to the 15-minute chart. We've got subminuet 1, A, W, X, Y, B, 1, 2, 3, 4, 5, C, flat pattern. This looks clear as day as a 5 to me. Okay. From here, 1, 2, 3, 4, 5. 1 is the longest. In this case, 3 is not the shortest, however. It is not overlap, but it is a legal impulse. Into 1. 3-wave move into A. Here. 3-wave move into B. Here. And I think this is now an impulse. 1, 2, 3, 4, and 5 to come down to get the 2. So in the shortest term, hence why I'm happy to favour this count, because it gives us a really close invalidation point where this idea ceases to be correct. Right. Might as well stay with the trend. Right. There's an old saying, the trend is your friend. If you're bullish and you keep getting higher highs and higher lows, keep trading it to the upside because it's happy for you to do so. The last pivot that breaks the previous low that breaks, that sequence of higher highs and higher lows is broken, and therefore at that moment we can now stop trading to the upside and wait for further confirmation of what's going to happen next. So invalidation point down here, and this is for micro degree 1 into 2. Now this will be 1 degree less in the other alternative idea. This is this is also micro degree because I changed the larger count, but we had one more subdivision in it as sub-minuet degree, but it's the same idea. 5 up, 3 back, 3 up to the B, 5 to come down in the C. Okay, and that will be another expanded flat. So let's just have a look at how this is measuring up. Then for the A, we come to roughly the 123.6, and then taking the length of the B from the C, we've come to 1 to 1 and bounced for the moment. Perfect place to put in the 3. Now we've got 123.6 to take us to new lows, 131.8 to take us to new lows, or 161.8 to bring us down deeper. So let's have a look at what we would retrace off of that 1. Coming to wave 2, we'll take the chart off of log. We can see that the golden zone, okay, if I can just find my drawing tool, the golden zone here is this low support. We came up, found demand here with the low of these buyers coming in, and the 61.8 and 65 perfectly sandwiched the 131.8. Right, so we could come into the golden zone here. We could come deeper to 78.6, which is also the 161.8, or we could even come through to the 89% retracement. So we've still got support levels below us before we come in and try and find some support further down for this 5th wave. Golden zone's a good bet. Okay, so if we find a bounce from the golden zone here, 1, 2, 3, 4, 5 up, that's a 1, that's a 2 again, at an even smaller degree, and off we go. Till finally we start to complete it. We get so small in the subdivision that we have to start going 3, 4, 3, 4, 3, 4, 3, 4, and that's when price starts to overlap on the upside. We overlap at the lows here. 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, 3, 4, 3, 4, like that. So we overlap at this end and we overlap at this end. That's roughly how an extension will look over time. So a little bit lower to go perhaps. Let's just have a look what else we've got here to work with. Let's throw up a fixed range volume profile off of this impulse to the high. Yeah, so we're back into support at the moment. Doesn't appear to be anything until we get to these lows here, which are not quite there at those yet, and that was roughly, if I remember, in the region of the 61.8 here. We've got some support around the 50. Very little going on until we get much deeper, so we may be looking at a deeper 2 here. Possible. Alternatively, this was a high and this is the first impulse down from the high, and we completed something up here. So that should be what we look at next, really, shouldn't it? So let's do that. Okay, so we've covered the bullish extension on the smaller time frame now, giving you the invalidation point at 22666. Spot 75. This breaks down, we're likely looking at something else, so let's consider what we are likely looking at if it's not this. So switch to the hour time frame, come back to the low, and we'll start fiddling around with what we've got off of the low here. Okay, if it's not a bullish extension off of the low, what is it? Well, if you want to get hundreds of thousands of followers for your technical analysis channel on YouTube, then you should get into the habit of drawing lines on charts, calling it some bullshit name, and then not explaining it any further, and apparently you'll be highly successful. Not bitter at all. Okay, but I digress. The point I'm trying to make here is anybody with eyes can see this is a contracting price, a contracting price pattern, or has the potential to be. And it's easy to just draw lines on the chart and say it's so, but if you're not going to define why those lines are there, what that pattern is, what the rules are that govern it, what the rules are that govern the subwaves of, what the different varieties of it are, and how we can legally measure it and understand it or confirm it, then you might as well not bother at all. So that's what we're going to discuss here. So, free Elliott wave lesson. Right. Not the in-depth one you'll get on my series, but let's just look at what the layman calls a rising wedge. A rising wedge or a falling wedge, a contracting wedge, expanding wedge, they're all diagonals. That's all you need to know from an Elliott wave perspective. 1, 2, 3, 4, 5, like so. 5 waves up. This is a motive structure, diagonal or impulse are your motive waves. In the ending diagonal variety, which comes in the wave C of a zigzag, wave C of a flat, or the fifth wave of an impulse, then you will get, or even the fifth wave of a diagonal, fifth wave of a motive wave. In the ending variety, every single structure has to break down into the zigzag family. Okay, like so. As per the rules on page 87 of the Elliott Wave Principle by Frost and Prechter. Now, if it's a leading diagonal, then the 1 and the 3 and the 5 can be motive instead. Now, by motive, we mean impulse or diagonal. The exception being the wave 3, which must be an impulse. Both of the 2 and the 4 still have to be zigzags and cannot take the form of flat patterns or anything else. They have to be a zigzag. Those is the rules, bruv. If you don't believe me, read it in the bloody book. 1, 2, 3, 4, 5, or a diagonal in the 1. Motive. 1, 2, 3, 4, 5 is an impulse, or a diagonal in the 5th. 1, 2, 3, 4, 5 must be an impulse in the 3. That's a leading diagonal. So we've covered an ending and a leading diagonal. We've only covered the contracting variety. If you want more detail, feel free to sign up to my Patreon and watch my Elliott Wave series where I'll cover contracting and expanding varieties and all the rules which govern them. So, is this fit for purpose? This is the question. Is this fit for purpose? Now, all we're going to do here is we're just going to literally from scratch try and count our way through this. Okay, try and make something of it. Right then, so what have we got? We've got an impulse here. And we've got an impulse here. Right, so first things first. Whether you want to take this high or this high to draw your line from, you got a problem already. Because if this is your 1 or this is your 1, you have a swing of expansive price action to here for the 2. Right? 1, 2. Now even if you say, alright then, 1, 2 to there, or even if you say, tell you what, I'll use my drawing tool, even if you say 1 and 2 to here, right? You say, alright, got a zigzag. I can live with that as a zigzag. 2, some kind of correction. We'll pretend it's a zigzag. And then I go, alright, then how do I get to the 3? Well, I can say this is a zigzag, right? Okay, this is the 3. Okay, alright, this is the 4. That's a zigzag. And then I can say this is 5, and this is 3, and this is diagonal perhaps, and this is a zigzag. A, B, C, and this is 5. Okay, so maybe we got some legs there. Right. So we've got to be a bit more specific. This was our 2. Should we draw the wedge now? Well, it's definitely not a contracting wedge if we take that as the 1 and the 2. The 5 does not throw over the trend line either. This is something else we would expect to see in a contracting diagonal. This is not a contracting diagonal, this is an expanding diagonal. In which case the 5 should fall short of the trend line. Okay. Well, if that's the idea we're going to go for, then I think that's probably a better bet. Now we do have an alternative as well. So how about we label that then, and we say, alright then, this is 1. Sorry, that's 1 to there. Okay. This is 2. This is 3. This is 4. Right? And this will be 5. Now, what do we and don't we like about this idea so far? Okay, well, Let's just measure. The trend line for the 4 does not come back. The 4 does not come back to the trend line, but the swing in price action between the two does. That's peculiar. The 4 should be deeper than the 2. It probably still is, but it should come back to within the bounds of a trend line. It's only just marginally bigger. The 4 has to be bigger in an expanding variety rather than smaller. It has to be smaller in a contracting variety. Okay, and then this is A, this is B, and this is C. Let's now check the validity of this. Free wave move into there. Free wave move into there. Oh dear. That's bigger. Free wave move into there. That's smaller. So we can't use this as a diagonal unless this also is an expanding diagonal. Problem is, it's not, because the 4 is smaller than the 2. So this is not an expanding diagonal, and it's not a contracting diagonal either. Right. Well, that's problematic also. So none of this makes sense, is essentially what I'm getting at. So let's consider something else. Let's consider the possibility that this is an ABC. Okay. Now let's extend it from where our 1 would be and from where our 2 would be. Oh, that looks nicer, doesn't it? Now, we started with a zigzag, so we will continue with zigzags. So from this point, this is going to have to be a zigzag. This is going to have to be a zigzag. In fact, I would probably argue for an extended A and a short C. This will have to be a zigzag. And then this will have to be a zigzag. Right, well, that's a bit problematic. A, B, C. Can we get a diagonal in the end of the C? Well, I don't know. Let's have a look. 1, 2, 3, 4, and 5. Yes, we can. Okay. This now becomes 1, 2, 3, 4. That's going to be tricky. 5. And this is a smaller wave degree. Now, thankfully, one of our members has provided a solution for this. An expanding triangle wave B. So we still get a zigzag. A to here, A, B, C, D, E to here, B, 5 down and a C to a lower low than the A. So we get a zigzag. So we can use that trend line. So I've already congratulated you on that little bit of creative thinking. So we can get the forward here as a zigzag if we ignore this expansive piece of price action here. Right, we're not ignoring it, we're accounting for it, I should say. So we've got a zigzag, we've got a zigzag, we've got a seriously fucking dodgy looking zigzag which looks way more like an impulse. And we've got an even dodgier zigzag that we've managed to wing. Then we've gone for a zigzag here which kind of looks like a zigzag. That could be a zigzag, that's a zigzag into a 3, that's a zigzag into a 4, that's a zigzag into 5. So the whole thing is a zigzag. You can go A, this will be B, and then this will be C. So, excuse me, I need to finish it over here because this is A, B, and C to come. Maybe we still, then we're looking for a throw over in the 5th of the 1, then the collapse into the 2. Okay. As you can see, it's a stretch, and I know my Elliott wave pretty well, and I'm having to bully this into place. I really am having to bully this into place. It's just because it looks like a rising wedge doesn't mean it is one. Just because a rising wedge by definition is a diagonal doesn't mean it's legal, right? Price just sometimes looks a certain way. Right? That's the thing you've got to be careful of, the trap you've got to be careful of falling into. Now, an extension can easily look like a diagonal, right? Because each wave, successive wave, is a subwave and therefore smaller than its prior. This results in contracting price action. So when we see contracting waves of smaller degree overlapping, we are either looking at a contracting pattern like a diagonal, or we're looking at an extension. Now I've managed to bully one in here for you. A, B, C. In fact, honestly, we'd have to move A back to here, excuse me, because we want this whole thing to be a flat. B, C, impulse, impulse in the A and the C. This was A, B, C flat, A, B, C flat, 5 down in the C to get a larger flat into 5 waves of a C of a 1, zigzag for the 2, dodgy looking zigzag for the 3. Okay, could we extend it further? Could you put the 3 up to here? Then this has to be 4, that has to be 5. That trend line's not going to like that, so no, I don't think that's possible. I think that's really the only explanation to get it all the way up into 1, 2, 3, 4, 5. And I don't think I like it very much at all, but I will put it to one side just in case it ends up looking like that. Leading diag. Alright, so now let's look at an alternative idea, a bearish one. Okay, bear with me. So here we go again. Oh look, it's the same leading diagonal. Aha, but it's not. So here we've got another problem. Right, we've got A, B, C into W, 5, and then we're going to have 3 waves down in an X to complete a deeper correction. The problem with this, whether we label it A, B, C as a flat or A, B, C to W, the problem we've got is we can get the 3-wave swing, the larger 3-wave swing, bump, 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 but then we finish here as an ending diagonal in a C wave. All of this must subdivide as zigzags, and as I just pointed out, we can do it, right, but it doesn't look right, and it's a bloody headache, and it's forcing things to be things that they're not. So the diagonal idea, corrective or impulsive, for me it's an ugly one, a very ugly one. Now I'm not saying I've thought of every possible alternative way of looking at it. I'm always open to ideas, and I'm sure once my members have watched this video, if they can find a way of making this a diagonal, some of the guys out there I know will. But that's the best I can make of it with my limited expertise, and I feel that yes, it could be, but it doesn't want to be one. Not really. So that leaves the only explanation left is that all of this is some kind of convoluted combination. Now, your guess, honestly, at this point is as good as mine. As good as mine. My first choice, prior to these subsequent highs, was very believable as a W, X, Y. Right? A double zigzag. Zigzag here, zigzag here. Impulse, 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 impulse. Connected by a flat. For the X. That looked great. And that would have been easy as pie. Impulse comes down, come back into impulse here. I was almost certain at that time. I was 50-50 split between the extension and this being corrective. And I was like, oh, that's 1, 2, that's 1, 2, off we go. And it didn't happen. We went to a higher high. This makes it much more complicated. So the best I'm going to be able to give you, and all I can give you for the moment, is that it's just a longer version of it. W, X, Y, X, Z. That's it. Now this cannot be used to label. This cannot be used to label a contracting wedge, because that's a diagonal and has to be labelled as a motive structure. This is a series of zigzags. One here, okay, and then one here. This is motive and this is motive, I'm cool with that. And then one here. How we make that work, haven't the foggiest. Haven't the foggiest. Okay, So that's just a headache either way. So for me, yes, I will hold my hands up and say it could be corrective. I'm having an awful job counting it though. Right, maybe I need to go back to school and spend some more time working on my Elliott wave skills. But either way, counting it correctively is difficult. Counting it diagonally is tricky. Right, there are problems. Counting it as a extension is the only thing I've been able to find that it's still not perfect, but by a long shot. But it's cleaner. For all the mess it looks like, it's cleaner. And therefore, it's my primary. So that, my friends, is where we're going to have to leave it for today. Because I don't think I can really say anything more than what I've already said. I'm bullish, and for as long as the low all the way back here in June holds, I'm going to remain some form of bullish. Because I would adopt the diagonal if the extension fails before I adopted a bearish count, unless in the meantime I come up with something to suit a bearish count. Alright then guys, I'm going to leave it there. Thank you very much for joining me on this technical analysis of Bitcoin. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. As always, a huge thank you to my Patreon subscribers. Your support, especially during the summer period at the moment where I'm not getting the workload done, is greatly appreciated, and I will do my best to continue to support you on the Discord and the Patreon in the coming weeks. If you're interested in joining the Patreon, please feel free to sign up. There's a link in the description box below. Head over, have a read of the various tiers, and feel free to sign up. Alright guys, take care of yourselves, and I will hopefully be back with you, well, as soon as I can. Take care. Bye bye.